Among the events in the U.S. calendar for the week ahead, investors will receive December's consumer confidence figures on Thursday. Previous month's numbers dipped a bit, with the Conference Board's Director of Economic Indicators, Lynn Franco, saying that overall, consumers are still quite confident that economic growth will continue at a solid pace into early 2019. However, if expectations soften further in the coming months, the pace of growth is likely to begin moderating. Against this backdrop, retail sales were stronger than market anticipated in November, adding to the allure of a healthy fourth quarter. But while consumer sales may have strengthened, the reaction in stocks appears to tell a different story. I'm here with ChartSmarter founder Doug Busch, who's been following this sector very closely. Welcome, Doug.
Welcome, Steve. Thank you.
Absolutely. I know that you've been looking at this very closely, and I'd love to hear your explanation for why this is happening as we head into 2019.
Well, like you said, retail sales generally have been strong. November just came in better than forecast. October was just revised meaningfully higher. And December looks set for another beat as Amazon just reported its best shopping day ever on Cyber Monday, selling more than 180 million items. Of course, that won't be registered in the December sales as it's late November, but I think that's going to be a nice catalyst to get consumer spending into year end. That being said, the reactions of the individual stocks has been noteworthy. When you get these poor reactions to good news, it's often telling, and I think that type of price action should wake up investors.
Yeah, it's very interesting, and I know that I've read some of your recent analyses on IBKR Traders Insight. There's been some bifurcation, I believe, between toys and gaming sector or gaming companies. Is that still happening?
Well, the selling the last 5 or 6 weeks been indiscriminate. It doesn't matter whether it's luxury, whether it's discount. The prevailing wisdom traditionally is that the luxury space would hold up better in an economic downturn as the wealthy seem to be less affected. That hasn't happened this time around, as we have names like Tiffany, Kors, Tapestry, which are all trading 40 to 50% off their most recent 52-week highs. In the discount space, another group that seems to act well in this type of downturn climate, you have names like TJX, Ross Stores, Ali Basement Bargain, all trailing bear market mode down 20 to 30%. So the selling's been widespread. There's really been no place to hide.
Oh boy, and I know you mentioned some specific stocks in your latest analyses. I believe it was Walmart, Macy's, Hasbro. Tell us a little bit of something about Walmart. What do you think there?
Walmart's probably my favorite pick right now in the space. In October, it took out a cut base right above 100, a very round number, but that fell apart pretty quickly, which is often a red flag. The last 5 weeks have seen very heavy selling pressure, but it's looking to fill in a gap here from August, which would align with the 200-day moving average. Now, we call that a cluster of evidence when two or more trigger points coordinate in the same spot, and it actually tends to make the trade a little bit more success-prone.
That's interesting. And any others that you want to touch on?
Well, Macy's on the other hand is one we're not too constructive on. It had a recent tug of war. It made a double top at the round 40 number. In fact, between June and August, there was 6 weeks that traded intra-week, different time frames, intra-week above 40, and 0 of them closed above 40. Now it has a bear flag, and a move below the round 30 number would have a measured move about 8 handles lower to 22.
Wow. So overall, the economic figures and what you're seeing in terms of price action in retail, it's a vastly different story.
Yeah.
Not correlated at all.
No, it's been a treacherous market. Any sector. Nothing's really been immune to what's going on right now. We know that trends tend to persist more likely than they are to reverse. So this downtrend could still have some legs to go.
Wow, it's very interesting. Well, thank you so much. We're really happy to have you here. I hope you'll be back with us.
Absolutely.
That's great.
My
Thanks
pleasure.
so much.
Thank you, Steve.
Doug Busch, founder of ChartSmarter. I'm Steven Levine with Interactive Brokers, wishing you a great week ahead.